Debt is like fire. You can use it to either cook your meal or you can burn your house down. Hey guys, Dominic Neshi here. Today I am with Lewis Heaton, Sam Assad, and our celebrity guest, Byron from the Driven Young podcast. Byron, thank you for joining us today.
My pleasure. I'm really excited about this talk.
Byron, I first came across your show on TikTok, of all places. I probably spent a little bit too much time on TikTok, or at least my fiance says that. But I attest to her that I'm learning new things whilst I'm on there. It's not just all procrastination. And I really respected what you're trying to do. And what I'm understanding from the Driven Young is you're trying to help young people learn about investments, to learn about themselves and how they can, effectively be better versions of themselves. Have I sort of hit the nail on the head there?
Yeah, pretty much. I mean, the tagline I say is practical life skills we should have learned at school. And one of the top life skills I think we should be learning is financial literacy, how to manage our money, how to invest correctly, how to be smart with it. So that's actually out of a poll I did when I interviewed heaps and heaps of my listeners. And the number one thing that came across was, what do you wish you're learning in school? They said financial literacy. How do I pay loans? How do credit cards work? What's interest rates? What's compounding interest? Of course, there's a lot of other things I talk about, but that is definitely something I'm really passionate about.
And it's interesting you say that, because I don't think that this is just a young person thing. I feel like all that financial literacy doesn't... I catch it with a lot of my friends that are 30, 40, even 50. My mum and dad have got some bad habits that they didn't learn at school. So it isn't necessarily age agnostic. It's kind of intergenerational. Now, today, what I wanted to talk about was that sort of intergenerational investing. We have clients that are older, some clients that are younger, some clients that have children. And what we notice is the younger generation of investors coming through have different difficulties getting into the market, different ways they need to think about investing. And just because your parents did it one way doesn't necessarily mean that you should be doing it the same way that they did. What are some of the challenges that you're seeing with the younger investors, and what are some of the things that you're seeing from your audience?
Yeah, I think when it comes to investing, like if we're talking property, I think a lot of people are just, it's so far out of reach, they're just not even going to try. So if a lot of people are going, well, the average housing price in Sydney is $850,000 or something ridiculous. To get a loan, I'm going to have to save up, 85 grand to 100 grand probably, on top of other things. It's like, it's going to take me years and years. They go, you know what, let's not even bother trying, which is, I think, why crypto has been such a hot thing, because crypto is like, well, I can get into the market with $50 in my wallet. And so I think a big difficulty, exactly as you mentioned, is, and one of my biggest worries is that young people are just going to follow the path of their parents. They're going to go, oh, I'll finish high school, I'll go to university, I'll use my degree to get a job, because that's how it works. I'll use that job to save up, and then I'll just buy a home with that, and then I should be sweet, just like my parents. I just think there's a lot of thing wrong with that. A degree doesn't equal job now. You need to do a lot more than just get a degree. You need to have a lot of, skills on top of that. Then once you've got that, it's just unrealistic that we can save up a deposit by ourselves. The only people around my age I know who have property usually went in with their parents, or have like a partner that they went in with, and they're leveraging 2 full-time incomes. So if you don't have 2 full-time incomes, it's very, very difficult. It's not impossible. Like, it's definitely possible. But I just think what I'm seeing with young people is they're going, it's so far out of reach, I'm not even going to bother. I'm just going to have fun. I'm just going to spend my money. Another big part of it, and I'd love to have a conversation around that, is we really suffer from instant gratification, this generation. We suffer from, I want it now. Whereas to generate wealth and to be smart investment, I'm sure as you guys would know, it's really a long-term play.
Yeah, absolutely. I saw both Sam and Louis nodding their head at different junctions whilst you were talking. Louis's eyes perked up as soon as you mentioned cryptocurrencies, and the fact that, this generation does suffer from that instant gratification and having to delay, building up a deposit, and to, as the older generations throw shade at us, saying we have to stop eating, crushed avocados or smashed avocados. What do you reckon about some of this, Louis, about, this instant gratification and, the difficulties that young investors have? Is it 100% valid? I think the question I want to ask you, because, do they necessarily have to go out and buy the $800 or $1 million home that their expectations have been set up for?
No, I think we're trying to. I think what the hardest thing we're trying to find at the moment is a balance. Like Sam told me in the office last week, he pointed the finger and said, "Your generation, exactly what Byron just said, is instant gratification." So, like, you go through Instagram, you get likes, you get comments, everything comes now, and then on the other flip side of the coin, 95% of those people will go home and they'll sit around a table for dinner with their mum and dad, who their investment journey lasted 45 years. As what Brian said before, again, you save, buy your own home, live there forever, and that's done. And that's, as we've always said, it's a one way to invest. But trying to find the right balance now is probably where most people my age and most people in the generation I'm in, an age bracket, but say between 18 to 27 or 18 to 25, they're trying to find the balance of, I want to get to my goals quickly. I don't want to gamble my money away. Like we've seen cryptocurrencies, they were fantastic. Now they're not fantastic. They rise, they crash. But then also at the same time, an unrealistic goal of, I want to invest my way to the future, but not wait 45 years to do so. So to your point, Dom, I think that what we found out right now and currently is that if we can utilize government schemes, grants, and initiatives to our best of our ability, and then to lower our expectation of what an investment may be, it's not going to be starry-eyed and beautiful as what we think it's going to be straight away. But finding the right balance in between the long-term goals, of course, because that's what, at the end of the day, that's what we're going for, but also trying to find out something that's going to start working for us quicker sooner rather than later.
Sam and I were talking about this earlier. My mum and dad are Italian. He's a Lebanese. And I thought that I'm going to say this because I can, what the Wogs did well when they came here to Australia back in the 60s, 70s and 80s is they went and bought what they could afford. They went and bought in what were perceivably shit areas and were, not nice, were scary, they didn't have everything going for it, and they weren't naive enough to say, I'm going to go buy in Darling Harbour or Potts Point at that point in time. They went and bought in, we're in New South Wales, they bought in Five Dock, they went and bought in Abbotsford, they went and bought in Balmain. These are all terrible areas back in the day, where now they're beautiful, really, really nice areas. And I feel like the younger generation needs to sort of learn something from that. I know Sam's mum and dad had similar experiences.
Yeah. I remember I'm from Melbourne, so we drive past Victorian terraces, which are now heritage listed, and my dad would point out as like, I got offered that for $8,000, and now it's $2 million for a single frontage terraces. 20 years later, and he kicks himself, and I guess, and I just see that, and I'm just like, wow, $8,000, that doesn't get you a used Toyota Camry these days. So, so it's a complete different kind of perspective, and and I feel like there's merit in that. When you see that, it's a bit of a drive for yourself, for the younger generation to be like, right, well, I need to get in there now, in hopes of seeing that double cycle in your lifetime happen a few times, like my parents did. And it can also mean, it can be a little bit disheartening to feel like there's a race that's happening and you're completely being left out as well. So going back to Louis, I just think it's really finding that good balance and getting yourself, a foothold in the market with something that is going to give you a good return, perform you, moderately well, because there is no such thing as a perfect investment. And I say that all the time. So, it's just about having, a bit of an expectation and know that this isn't an overnight outcome. So,
well, do you know what,
Byron,
Dominic?
You go.
I was just going to say, you made a good point there when you were talking about how, like, when your guys' parents came to Australia and they bought these properties in shit areas or whatever. It's funny. I think a lot of generations above my generation, they weren't investors. They just did what was normal, and buying a home was normal. And then it paid off well for them. I just think it's completely unrealistic for my generation. You have to be an investor. You can't just do what's normal. You can't really just buy a home like our parents did, or like my grandparents did when they weren't smart or savvy. They just kind of went, oh, here's what you do. You get a job, you save up, you buy a home. And then they got really lucky. It went from this much dollars to this much dollars, which once again, we can't possibly go from $850,000 per home to in 20 years time at the same rate, that would be like, $100 million if you're going from $8,000 to whatever number you said. So I think we do have to actually adopt more of an investor mindset as opposed to just
for sure
following what society says.
And just to, in addition to what Byron is saying, that Australian dream to be mortgage free by retirement is completely, not in line with reality, because it just doesn't work that way. Buy a home, pay off the home, have an unencumbered asset, and retire and live off your superannuation. There has to be different kind of avenues for the generation that's coming, because $100,000 today isn't going to be worth $100,000 in 20, 30 years' time with inflation consistently and et cetera, et cetera. So, yeah, it's really a different today. So there's some really wise things we can really take from that generation, and then there's some detours that we need to take to make it ahead.
That's a good point, because you're right. There is some wise things. In fact, buying things that you can afford, but we can't do it the way they did it. We do need to be investors. If it means that you're in Sydney and you've got to buy in Brisbane or you've got to buy in Melbourne, c'est la vie. You got to buy what you can afford.
I think like a lot of my family friends, like my mum's friends and stuff, they're all essentially financially free. They're mortgage free. They're not savvy. They just bought a home in 2000 and it's tripled or quadrupled or gone up 5 times in value. They weren't thinking, I'll buy us an investment so that I can pay it off and stuff. They were just doing what was normal. And that's where I kind of go, I worry about their kids going, I'll just do what my parents did. I'll just buy a home and it's going to go up by, $800,000 in a decade, which is just, it could happen, I guess. But I don't think it's, I think we need to adopt more of okay, let's have a look. How do we invest? Should I look at stock? Should I look at crypto? Should I look at housing? Should I look at starting a business? There's lots of different ways to invest. I think my key message for young people is just start getting educated around it.
Yeah, I completely agree. You do need to get educated about it. There are a number of different ways that you can do it. And I think, if we go back and have a look at the way that people invested in the past, that, the boomers and the Gen Xers, they're buying properties pretty cheap, right? But the thing that they had going against them is debt was very expensive. Particularly in the 80s, debt went up to 16, 17, 18%. And why they thought, well, 16% is a lot of interest to be paying. I need to pay down my debt as fast as possible. People that are investing in our current age, debt is extremely cheap. So debt is like, I always say this, debt is like fire. You can use it to either cook your meal or you can burn your house down. So debt is just a tool that we need to now not be so scared of, and maybe get better education, as you're saying, to learn how to use the debt to then magnify our returns, but do it in a very safe way and understand what expenses are, what revenue is going to be, how this stuff impacts my portfolio, because our parents didn't need to use debt. Our grandparents didn't have to do it, but we certainly do.
Yeah. And I'm totally with you, Dom, because I feel as though you're either two sorts, right? There's one category, you're either a trust fund baby that doesn't need to worry about debt, and an inheritance is coming your way. Because I know a lot of people that, in I would say around my age, their parents are in their 60s and 70s and they are still living month to month, and they're okay with that because they know something's going to be handed down to them, in 10, 15, 20 years' time, as bad as that it sounds, but it's the truth. But people need to really get comfortable with the fact that debt is what actually makes you money. Unless you've been handed down, an asset, an unencumbered asset, here, have it, do what you want with it. You can go take those risks and not need the banks, but you need the banks, and that's the truth.
It's even teaching the difference between good debt and bad debt. Like it blows my mind how little some people know. Like even I know people in their mid-20s who don't really understand good or bad debt. They're getting car loans. It's like, oh well, I got debt. Is that right? No. And so one of the parts I teach when I teach to young people is we do a whole thing. We do break up into your teams. I want you to take a guess. What percentage of income do you think the average Australian spends? The answer is 103%. The average Australian is spending 103% of the income. So how is that possible? Credit cards, Afterpay. I love talking about Afterpay because that's a big one. And even just getting across, if you can start to learn to comprehend the different types of debt, just the fundamentals. It blows my mind how many people don't understand that.
So is that one of the issues that you're seeing with the younger generation? Quite literally, there no education, or is it just all self-taught? Are there any systems, or parents are not handing down good information?
Oh, absolutely. I mean, obviously, so when I do this money and finance section, I did it on the weekend in Canberra. We had about 80 kids, anywhere from 14 to 20. So it can be a bit tricky because you're teaching to different ages and people have different questions and stuff. But usually the kids who know stuff are usually they've looked on YouTube or their parents have taught them. There is no like structure that every Australian gets that educates them around this, which I think there should be. Like, it should be a whole section at school, in my opinion. And so, yeah, some kids are really educated. Some have absolutely no idea. They can't even comprehend. I've got to like break down, like, what is interest? Like, how does that work? I teach them what tax is. Half these kids don't even know what tax is. Like, they know of it, but they don't actually understand what the point of tax is and why we pay tax. Now, once again, they're 15 years old, so you don't have to expect them to. But it just blows my mind that this isn't part of our curriculum.
And what kind of responsibility? Because a lot of people that listen to our podcast have either got kids or are, or they're a first-time investor. And it's funny because a first-time investor, the average age, or the first home buyer, the average age is about 33, 35. So you'd expect the first home buyer to be much, much younger, but they certainly are not. For the first category of people that are parents, are there certain messages that you should send to them? That should they be talking to the kids more openly about finance? Do they need to be a bit more open about how they're thinking about it? And then also for the people that are a little bit, younger and they are buying their first home, is there a message in there for them to sort of think about their investing being different from their mum and dad?
Yeah, I mean, firstly to parents, I think parents need to take it's not their fault. I just think they need to understand your kids aren't going to learn this at school, so you should take responsibility for it. But then the other thing is, half the parents might not even know what they're doing anyway. If you've got parents who are really bad financially, those skills or that their relationship with money might pass down to you. And so I really think parents do need to, rather just put all their trust into school when it comes to that, they need to go, you know what, let's start teaching this. And I also think they need to have more open conversations. Like, it's bizarre. I remember growing up as a kid, I found it so weird how adults would just always avoid, oh, don't tell them what wage you're on. Oh, don't tell me how much your house was worth. It's like, why? It's like they're more comfortable talking about sex than they are about money. It's like, why is this? And I think it's like, I heard like conspiracy theories. Companies didn't want people saying that because they didn't want to know that they were on different wages and stuff, and they were paying people different wages. But I've always found it bizarre that we really make it like taboo to talk about money. So I think you need to be more open. And then to younger people, once again, like, it's so easy to get educated. Like, there's podcasts like this. That's what I do on my podcast. It's all free. You can get books that are like $20. Rich Dad, Poor Dad, Richest Man in Babylon. All those, just fundamental books that give you a good overhaul of understanding of money. It's not that difficult to get educated. You've just got to be driven. You've got to want to do it yourself, and you're going to have to do it yourself. You can't rely on your parents or society. Sometimes you can. My parents are pretty good, but even then, I've just actively searched for ways to learn as well. And like stuff like the event we run, Empower You. Send your kids to events like that. Force it on them.
I really like what you said there about talking about money at home and it being taboo. At Wealthi, we're all pretty transparent. Like, everyone kind of knows what everyone's up to. We share what the business is doing, what the revenue, what the expenses are, because I'm a great believer in having that transparency, having a good conversation, and everyone then understands how things work. So then you're fully accountable and responsible for what you're doing. And it's interesting because I know that households are very, very weird about how they chat about cash. And I know that as a kid growing up, my mum and dad didn't really talk about money. They didn't talk about debt. And I think it was almost like a point of shame, maybe, because they didn't have a lot of cash in our household, and they didn't want to talk about how much stress there may be on them. I'll put the question to you two fellas. What were your experiences, or what are your thoughts on talking about money in houses? And, what are your thoughts on that? Is it a taboo? Did you talk about money in your house, or will you talk about money with your kids if you want to have them, and your partner and whatever else?
I think,
Louis?
Yeah, I think. I mean, I was never. It's hard. It's not. I'm always quite surprised when I'm talking to clients, and I think that talking to people and just talking to, I guess the general population at the moment. If you do bring up how much you're on or how much you earn, or any, if you're not that close relationship with someone, they're not your partner. Even be weird if it was looking back now when I was growing up, it was my brother, or you've never grown up to ask how much mum and dad made. But in saying that, I don't think we. That's not the point. It's not the point of kids knowing how much their parents earn. But I think to Byron's point is that the more we familiarize ourselves with strategies around not making money, but making money and making the right investments and doing the right things with your money earlier in life, I think the quicker we get the fails out of the way, or the quicker we get the mishits out of the way, and the quicker we can see success about it. Like I heard a really funny quote once from a family friend of ours, and it said that money's not the be all end all, but I tell you what, it makes it a lot easier. So if we can start understanding the more insights and in-depth knowledge about how, I guess, the fundamentals of investing works, not more or less knowing like what the dollar figure amount is, but if we can start talking it to a younger age, I think we can see more success going through the years of when you're truly developing as a person, like 15 to say to 25, you're going through high school, and we start to really get the understanding of where we want to be or what we want to do with our money, and you're able to make that choice yourself, not look down the barrel at, say, when you're 45 and haven't been able to make that choice yourself because you've relied on what the generation before you's done.
Well, that's exactly it. Like the thing that my audience has over the four of us is they've got time. They're so young.
Yeah.
It's like if you guys can understand these concepts, like we do a whole compound interest just to get some sexy numbers up. And we say, imagine you invested $100 a month for 45 years at 10% return. Here's how much you get. Then we go $200 a month. Then we go $400 a month. Then we do a 15% return, then a 20% return just to get them excited. And but the main thing is it's over 45 years. And 45 years for them, they'll be like 60. They won't even be retired yet.
And it's, yeah, exactly right. And that's the one thing I guess everyone's jealous of as well is time. So it's I wish I started that last year. I wish I did that 2 years before. So if you can, and it's also it's beating a dead horse or flogging a dead horse sometimes. Like when I was in year 10, I know what it was like to hear from my dad. Enjoy every minute of high school. I tell you, the minute you leave, the minute you go, shit, I wish I was back there again. So I know what it's like to be someone in year 10 going, I don't give a shit about this at the moment. Like all I care about is going to seeing who my girlfriend or boyfriend is, or going to a party or playing sport on the weekends. And as that should be, that's what you should be focused on. But if we can start implementing little bits and pieces here and there, as you're doing, Byron, in your cinemas and stuff, I think that is going to be the most beneficial way for the next generation to succeed in this investment market.
Yeah, well, it doesn't.
Sammy, I'm interested to know. Sorry to interrupt, Byron. You continue.
Oh, I was just going to say real quick. I was just going to say they don't even have to be like advanced investors. We just teach the importance of saving, 10 to 20%, ideally more, but minimum 10%. If you put that into, something that's returning 7%, which they say is quite achievable, 7% return, and you just do that consistently and you're smart with your money, you can be financially free by the time, you hit a certain age. It's not like you have to be, you have to give up on other things and focus on investing. You can do it relatively simply in the background. Obviously, you could start get property and do all this other stuff, but you could still play sports, still do everything you want, and then just invest in the background. So, and I think that's another thing people should understand. Like, it's not a full-time job. You can do it, and they can pay people like you. You just pay people to do it for you.
So you can do small amounts of little investments. I really like that because a lot of our clients will come to us with like $300,000 cash, but they haven't invested in anything all of their life. They just had it in cash. So then even the idea of investing something's terrifying for them, and they're looking to buy a property. So they want to use all their money. So I love the idea of being a young person, making small investments, seeing what 7% does to $100, and then that changing over time. I just want to quickly harp on back to Sam because I'm very interested. He grew up in a different household to me and to Louis. Did you guys talk about money?
Yeah, we did very, very openly. And I had again, I'm going to use the term. I had a big wog tight ass dad. So there was no secrecy of what we're earning and how much we have in our accounts. To this day, my father will ask me, how much savings do you have? And he'll judge me for whatever the balance is, depending. And I look back and when, it's my friends. I know. I mean, I know what my brother earns per week. I know how much one of us is tradie. I know what is in his account. He'll tell me. So I'm really grateful that I grew up in a household where we were open. We were having open conversations about money, but also I have people that don't even know what their brothers actually earn. I said, I find that very, I actually find that really foreign. I said, what do you mean he's your brother? You should know. But I understand that there is a bit of an element of, not being too intrusive and independence, privacy, et cetera, et cetera. But what I can take is that the open discussions that my father has made us have as a whole in a group, he'll put you on the spot in front of your siblings, is that he's taught us a bit of accountability of stupid spending and living beyond your means. But also the other side of that is that he kind of makes you feel a little bit judged that you are living and et cetera, et cetera. So I think he was just trying to teach us to have a balance in life. But you can either take it the way you want to take it. But it's made me ask what people's salaries are, and I didn't see what the big deal was until I did get that kind of rejection and objection of like, hey, you don't need to know that. But I think
first date, what are you earning? That might seem suspicious.
yeah, first date.
Yeah, what's your BSB? What's your BSB number? But yeah, so it was left field to maybe how you guys grew up, but there was a lot of open discussions, and that probably stems from immigrant survival mode coming into this country, very different, to the way I've grown up, in this generation, et cetera, et cetera. So. There was some really candid, on-the-spot, accountable questions that were asked.
I really love that. I love the idea of having open conversations, at least within your family, because I think there's a sense of accountability. There's no shame in it, and you can help one another.
For sure.
Like I'm like that now with our family. I tell this story often. Charlotte, very good saver. But her parents used to give her a salary or not a salary, like a small amount of money at the start of every week. But that had to pay for her toothbrush, her toothpaste, her holidays, her trips, like a school uniform, like everything. And that taught her how to be a very, very excellent budgeter and very good with her money. And I really respected that. Where on the other side, like when I was a kid, money was just, you get some and it was a black hole. Whatever you did with it was your business. If you had missing teeth and stuff after, because you've been eating too much candy, and that's your fault. So Byron, I mean, it sounds like you're a proponent, or you agree with transparency and people talking about money, and it's a good way to kind of get things going on.
Yeah, I mean, obviously, as Sam mentioned, there is a level of privacy. You don't just ask random people, but if it's relevant and it's like you want to help them, and obviously you're not going to shame them. I think there is people might be scared to say it. Either one, because it's too low, or two, it might be too high, and they don't want to sound egotistical or like look how much I'm earning, which is a big thing in Australia, right? Tall poppy syndrome. But it's really interesting hearing Sam's story because I kind of wish I had that. I love my parents. I think they've taught me a lot when it comes to finances. But I do remember when I was really young, we had quite a few homes, and we got our first home. I remember I was just like really interested to find out how much it was worth, because at that age, I had no concept. It could have been $10,000. It could have been $500,000. I had no idea, and I was just curious to understand. And I know how much it costs now, but for some reason my parents didn't tell me, and I just had no idea why. And then you enter into the adult world and you go, oh, that's just part of society, really. There isn't really a logical explanation. It's just the way things are. But like a good friend of mine, she's got a pretty big Instagram following called Tash Invest. She's got about 20,000 followers, or 25. And she shares her entire portfolio. Like every month, she has an update of where everything is, her debt. And people love that. People love how open and transparent she is. So I do think it is something a lot of people are looking for, especially on social media, like more authenticity, more transparency, more, because it's, half the people that we follow and half celebrities and sports stars are broke, but we just think they're really rich because but they're just terrible at spending money. Like there's a stat like 90% of NBA stars go broke after a few years after retirement or something. So I do think there is a level of, legitimacy and authenticity that could be improved by being, open with those types of conversations.
That's really interesting. That, and I think that's right. Where there are all these athletes and stars that are rich, wearing shiny watches, but they don't own half of the things that they're showing that they own.
Yeah.
We're in the age of perception, right? You know what I mean?
Oh, 100%.
If you're the way you're perceived is everything. Like in today's world, I'm talking the means of everything. It's all about perception. If you're perceived this way, how many followers you have, who talks to you, how many comments you get, how many likes you get, who's this and this and this and this. If you're perceived one way in your own mind, it almost creates that these poor kids growing up now are stress-free from it, right? And that's why I guess to your point, Byron, you get someone like Tash, or they have Instagram pages, and authenticity with it surrounding these topics, or just being honest, truly shines right now because you're such an outlier. And it's hard to have the conversation. Like, it's really hard to tell someone or to talk about these things. But when you see someone doing it, you go, holy shit, they're being real. It's not just a perception.
Yeah. Especially in the world of so much, scams happening and so many people lying. It's like when you see someone who has their entire portfolio that it shows you everything they've got. They show you when they lose money. They show you when you win money. I'm way more likely to follow them because it's like, well, they must actually know what they're doing and they have the proof. But yeah, I mean, this whole world is just status chasing. A lot of people are just chasing status, regardless of the money. And I open the money and finance section at this workshop. The very first thing I say is lifestyle inflation. I'm like, that's one of the most important points I want to get across to you guys. Like, lifestyle inflation. What is it? Why is it so dangerous? I can give you examples of nurses who've retired before doctors because they were much smarter with their money. The doctor earned 4 or 5 times what their wage was. But because they had other doctor friends, they spent it on watches and nicer cars because they wanted to keep up with each other. And now they're not they're not very good with their finances. Actually, a great company you should reach out to, good friend of mine, they called Ladies Finance Club. And they do educational content with finances for women, usually about 28 to 35. And typically the whole thing started because these women were at corporate jobs earning like $250,000 a year, but none of them had any savings and none of them had any investments. And my friend was blown away. So she started this whole company to help educate these women around their finances. So yeah, lifestyle inflation is a really, really big point I love to get across because I think it's so important.
I can attest to that.
Guilty.
Not personally. I personally have had some lifestyle inflationary spending on shiny things and whatever.
Oh, it's okay every now and then if you're smart with it, but just understand what you're doing.
Yeah, that's exactly right. But I grew up with a peer group of people, and I used to be a financial planner, and you'd see people earning $250,000 with no savings because they've got the nicest penthouse apartment, they've got a nice car that's on lease, they've got the latest suits that they throw out a couple of years later. And then their consuming behavior is just terrible.
And just real quick, and just on that, the other sad thing about that is they now have a lifestyle which requires them to earn that much money, so they can't leave their job and they're stuck and they're trapped. And so if they go, oh, I'm hating this job, well, I can't leave because I need to earn this much money to service my penthouse apartment and my car loan and everything. So they almost like trap themselves. Sorry, but I just wanted to get that point across.
No, I'm with you. But Byron, I'm very mindful that you've got a busy day ahead of you, and I don't want to take up too much more of your time. I just want to go around the screen, the Brady Bunch here, and ask: is there one bit of advice for new investors or these younger investors coming into the market? Things they should think about, maybe incentives or little life hacks. What should they be thinking about? We'll start with Louis.
I want to reiterate my point last week, and don't want to sound like a broken record, but I really want to keep hammering it down. Don't base investments that are judged by peers, family, friends, if they're frowned upon, if they're looked down upon. Do stay in your own lane, or get to outside of your own lane, but listen to the right people. Like, take all the advice you need to, but don't be put down, or don't be put your back against the wall by people belittling you on your investment, because it may not be as good as what is, again, perceived in by other people, because I promise you right now, they're not doing it themselves. So stick to your guns, and the investment may not, again, always might look the best, or it might not do the best, but just try, and don't be put down by other people sort of belittling your own wants and doings and your own journey. But to more statistical point, government grants, use government grants. Our exemptions are ending. Like stamp duty in Victoria, we've got 9 more days to get a contract signed and delivered. So please, that's 50% off right away. First home buyers, and the stamp duty concession New South Wales got up to 800 grand. And, we've got another year. NAB, 5% deposits. These are all things that you can talk to us about. But please, look online, research, utilize these things because they're making it a hell of a lot easier to get in the market than it will be, say, in another year's time.
Yeah, it's good tidbit. I really like that because, a lot of people will pass judgment on your investment decisions because it may not, fit within their criteria of what's a sexy investment. So I really like that. And there's a lot of free money being thrown around by the government, and it'd be silly not to take it. 5% deposit's great.
Yeah, I mean, the
Sam,
Australian
what about
government.
You,
There you go, Sam. Go. I'm done. I'm going to keep ranting.
Mine's just a simple message, and I say this a lot. Start with some really good preliminary education about the root of your investment journey, and have the courage and take that risk, because the real education happens is when you actually take that step. So there's only so many education seminars, etc., that you can go to, but eventually it will come to a pointy end where it's time to make a decision. Base it on good, informed education, and take that leap of faith. It takes a bit of courage to do so. When if it's breaking that generational cycle of non-investors, be that person to do so, and you'll see it pay off in some retrospect, down the track.
Yeah, nice one, Byron.
I think just highlighting again the importance for this generation of delayed gratification and understanding that investment doesn't have to be sexy. It doesn't have to be Tesla and cool properties. Like if you want to just long term, you can invest into ETFs that would give you a 7% return. Like that's really where the money is going to be made. But what we see in the news are these massive spikes of Bitcoin and Dogecoin and Tesla, which is what we think investing is, and we get very distracted and go, oh, that's how that looks really fun. I can invest now and a year later have this much money. But really, you just want to play the long game. And when I mean long game, I mean, 5 years minimum, like you really long game, like, the rest of your life. But yeah, on top of that, get educated, but really just focus on delayed gratification and get educated around all that stuff and start now. Your biggest asset is time.
Brilliant. I think if you take all of that, it's a really good set of, there's a lot you can take from that. Go and get educated, do the not so sexy stuff, the get rich slow scheme, and compound interest is amazing. Doing the government grants, taking free money where you can, because it won't be here forever. That helped me get into my first property and whatever investments are available, and also get your hands dirty, because it's all well and good to research Robert Kiyosaki and to do The Richest Man in Babylon and to read all the books and the podcasts and everything. But if you don't go outside and actually do it, you'll never learn. You won't get anything done, and you'll always sort of whimper in fear at the thought of maybe losing. Just go out and try. Take some safe bets. Gentlemen, thank you very much for today. I think there's a hell of a lot that new investors, young kids, older investors can take from this podcast. So Byron, thank you again for today. And I hope your audience gets heaps of value, and I know that ours will. So thank you,
My
fellas.
pleasure. Thanks so much for joining, guys. That was really fun.
Thanks, Byron.
Okay. I'll catch you all later.